Virginia, all the back roads, Louisa, anywhere you can name. Yeah, I've tracked
Oh,
down
I'm
players.
sure. I'm sure, man.
Yeah,
Brandon, he was always, I keep telling people because, I mean, he's retired now, but man, he was always good. I mean, I played, you know, like
yeah.
T-ball and everything with him, and he just always had that, you just knew he was going to
There's
be, he
there's
was going to
that,
be
those
good.
guys that stand out at that early age. That
It is. It is. It's just finding him, but I mean, he just always had it. I hate him because of it, because he was just always so good at everything. But but I'm so
that's
happy for him. Yeah, he's done well. He's a good guy.
that's the life there.
Yep.
Well, hey, I tell you this, man. We have a nice group coming in, and I think we can go ahead and get started. Let me.
Cool. Sounds good.
Yeah, I appreciate. I truly appreciate you coming through. It's a pleasure to meet you in person, and
Yeah, I see you got a lot of tickers up here, man. You guys are going crazy here.
yeah,
A
just
PAC, a GLD, and
yeah, just looking, just kind of. Today was just a day to kind of creep through, and then get some questions for you. See, I know you like playing the bank, man. I like that. And a lot of interest in what you do. You know, a lot of fans of Option Alpha and
cool, man.
a couple of the rooms. So I'll get us started. And well, I'll tell you what. Let me go ahead and do the intro, and we'll get rolling.
Great.
Let's make sure everyone's in here, and we are good to go. All right. Welcome everyone. Today is Tuesday, October 6th, 2020, in the year of COVID. It's 11:02 a.m. Central, and today's special guest on the Mobile Trader Network is Kirk Du Plessis of Option Alpha. Kirk, thank you for coming through.
Thanks, man. Thanks, JD. I appreciate it.
Well, I tell you what, I want to start out with everyone. When did you realize that the market was for you? That you wanted to make this your your profession, your
Yeah.
passion, I guess.
Yeah. I didn't actually realize the deep level that I have a connection with the market, or I guess I have a desire to be a trader in the market until basically about like 2 years ago. But I would always say that I was always interested in finance. My parents were always in finance. They've been in mortgage lending forever. And I would always help them out and did that for a while too. And I think that I just naturally had this interest in investing and real estate markets, finance. My mom took me to an Invest Tools, so like that's way back in the day, like an
Yeah,
Invest Tools seminar when they first started coming around and doing the Invest Tools stuff. And I was always like hooked on it. It comes naturally to me. I was always good at math. It was my strong suit. I'm not good at writing.
right.
It's just what I thought I could do. And so, but about 2 years ago, I realized, oh, this is why I do it. And I tell this story now, and I've talked to my parents about this, so they know that I tell this story. But so my parents went through a lot of financial trouble consistently because they were both in the same industry. So they either made a lot of money together because they were both in the same industry at the same time, or when things weren't good for that industry, they didn't make money together. And it just
Right.
seems like and definitely was where we just went through these major ups and downs as a kid, right? Like some years are really good, some years are really bad. So as a result, now what I do is I try to avoid as much volatility as possible, right? And so what I've learned is that when I tried day trading, I tried forex trading, I tried all of it. And what I realized is like I'm really bad at day trading, really bad at forex trading, can't, pick a pattern or chart or whatever to save my life. And so I had to figure out something that reduced volatility financially and just made sense to me. And so options have always been that for me. Just the
Wow.
math and the logic and the theory behind it, just like logically makes sense. I get it, and I try to understand it, a little bit more. But that's why. Does that help?
That perfect. I know that's perfect. I know a lot of individuals in here would wanted to hear something like that. So tell me this: growing up, would you say maybe at the dinner table, or were you exposed to just financial conversations, just in just common, at dinner? We, my wife and I, we try to talk to our children, and we different subjects, but the market is one, so of course for me sports, but just exposed to just that the basic conversation to where it's your comfort level was there at an early age.
I don't think that they did it consciously. I remember that they always talked about it. Like, we
Okay.
joked as a family, but it wasn't actually a joke. Our family trips, when we would go someplace, my parents would go to open houses. Like, we'd go to the beach or go to Colorado to visit in-laws, And on the way from the airport, we would stop by and go to open houses. And that was just like what we did. And we would look at property and look at different property in different
Really?
areas. And it was a fun experience as a kid because we just run around all these houses and, a home builder site. We'd stop by and take a look at the open house and the model. And but I heard it constantly. I heard the numbers and the math and the interest rates and the price and whatever. And so, I've always had an interest in that. And so I think just naturally, I don't think they did that on purpose. They weren't like, "Hey kids, this is an open house and this is why
Right.
we're going here." They just took us along. And so we do that now with our kids. And I try to make it more of a purpose thing. I try to tell my girls like why we do what we do and how we do it and like where food comes from. Like, it doesn't just grow on the trees.
Right.
Like,
Right.
we have to do things. I try to do it a little bit different now, but yeah, I think it was just something that we just were involved in. Just kids watch, right? Like, I got three
Absolutely.
kids. Like they just watch, they know. And so if you just show a little bit of interest, I think it helps them out tremendously because too many people are financially illiterate anyway. So
Definitely. And I think that kind of drifts into your one of your last comments on your most recent podcast, how not frugal you are, but you don't want to run water unless you have to. I guess just the application of a gift card for specific needs. You just said, hey, I'm going to either spend it here or there. Am I going down that same the path that your focus of I guess financial responsibility in that regard?
I think it's an awareness thing, right? So to use
Okay.
like a sports analogy, because I played football in college for a year, never grew any further, so couldn't go any further,
Right.
unfortunately. But played football in college, and I remember playing football, and I was a quarterback, which you need to grow to be a
Yeah.
quarterback,
Yeah.
and
A
I
little
didn't
bit.
grow. So right, so I was a quarterback, but I remember all of my coaches, used to it was always eyes downfield, right? And so you had to have that pocket awareness. That doesn't mean
Right.
that you need to drop back in the pocket and you need to watch every single player that's trying to rip your head off, but you need to have some sort of awareness. And I think that when it comes to finances, I treat it very much the same. I'm not sitting at home, combing through my like my bank statement at the end of the month and doing a detailed line by line, penny by penny budget. I'm okay at this point not to do that, right?
Right.
But I think it's having that awareness like, what am I really spending my money on? Like, do I really need like a new jacket or am I just spending money on a new jacket? Can I
Right.
just simply turn off the water, and not let it run? Can I turn off a light switch when I leave a room? Can I try to plan my day so I don't have to make 10 trips to the store? And I personally geek out about all that stuff because I know the compounding effects of, every extra trip to the store is, an extra 3 miles and gas is this. And, like I go crazy on that.
Right.
I don't think a lot of people do, but I think it's just having that kind of pocket situational awareness, I think could do wonders. People don't even realize it. They don't even
Yeah.
realize what they're spending their money on.
My wife's on this call right now, and she walks into the kitchen, and whenever if I'm washing dishes and the water's just running, she'll kind of, okay, if you make a you know, a, some dishwater, if you're going to wash them by
Yeah.
hand,
Yeah.
let's go ahead and just save a little water. And yeah, she's very big on that. So I, I want to get into the discussion from an older podcast that you mentioned, like. The negative stigma of having a small account. You mentioned
Mhm.
you because a lot of individuals in our groups, we have newcomers, intermediate traders, but we're not talking about walking into a $50,000 account. We're talking about 500, 1,000, 5,000 to where, and you mentioned about the process over just the bulk of a large account. Sometimes it could be a great training tool. Could you kind of expound on that?
Yeah. Yeah. I think it's great. So I think that a lot of people, and I know that there's probably a lot deeper cognitive, things that are going on than what I'll say here, right? So by no means am I a psychologist expert on this, but I think what happens at some level is that people save some money and they want to start investing it, which by in and of itself, you're, light years ahead of everyone else. So you should be proud that you have the money to invest and you're at the position where you're like, I'm going to do this. But I think what people do with that money is they look at it mostly, whether it's conscious or subconscious on some level, as money that they're testing with, right? And it's like, well, if I lose 500 bucks, it's not going to kill me, right? I lose, $3,000, it's not going to kill me. And I know people do this because I see all the posts and groups and stuff like that. I see all the, Robinhood groups and Facebook groups, and all these people are like, oh, lost 3 grand today. Better, try again next week. And I feel like that type of mentality is so dangerous because what you end up doing is you end up playing with everything that you get. And you think subconsciously or consciously that having more money will be the solution. And what I've always said is that if you can't successfully trade with a couple $1,000s, adding more zeros is just not going to make a difference. In fact, it's
Wow.
just going to add more headaches. You'll see a quicker way to lose money when you just add more money. That's why all the people who win, lotteries and millionaires and whatever, they end up becoming broke because all of their financial habits are broke anyway. So adding more zeros to their bank account is just a quicker way for them to become broke.
Wow.
If you're a small trader, I firmly believe that the mechanics of trading, the principal elements, are even more important because you don't have the sacrifice of this big, cushy account to play with. So, becoming really religious about position size and diversifying your trades, and, at least at first, trying to go after things that have a high probability of success because those allow you to get the quick wins and build up some consistency that will allow you to do some more exotic things that you want to do, right?
Right.
So like a hitter, right? Like a hitter, like don't swing for the fences, like get a couple singles under your belt. Pitcher, throw a couple strikes before you try to do some crazy curveball thing, whatever. Like
Right.
get some consistency under your belt first. And if you approach it like that, in my opinion, I think if people approach it like that versus the alternative, then I think their performance is wildly different.
That's an outstanding just breakdown because I mean, if we go back into baseball, I search for process. I want to find someone who can replicate an effective process rather than going for results or P&L. Just
Amen.
if I can repeat that process over and over,
Process versus outcome. Always.
perfect. Uh,
Yep.
I mean, with baseball, the Yankees, we would say that the Yankees, they had enough money to put $1 million band-aid over a mistake. In a smaller market organization, your process has to be impeccable,
Hmm.
to where if you don't have the money to cover up any of your deficiencies. So
Right.
um,
There's no cushion. Yeah.
investor biases. I,
Yeah.
I know can you just
Which one?
briefly touched on that? Just on a couple that maybe jump out to you because that was a very interesting episode that you
Yeah, that was
released.
191. Yeah, 191. And we did 13 of them because I've touched on them at so many different points. I think what it comes down to, and I'll say this, and maybe this wraps up a lot of them. There's two things that I would say I've learned in this process and continue to learn because I'm not perfect in this. One, we're not aware of negative or positive emotions in the moment. So, what we think is a negative experience and a negative emotion that we have over a losing trade or whatever could turn out to be one of the best experiences we go through because it changes our or shifts our mentality in a different direction, maybe in a more positive direction. Me, myself, when I started trading at home, I was trying to day trade. I had really good days. I remember vividly the first day that I made $1,000 trading in a single day. And I went out and I clipped the newspaper, I printed my position, and I framed it. And then the very next day, I lost all of that money in the market. And I'm thinking to myself, like, why in the world did I like frame this day? Because it was such a big day and I was so proud of myself and I was so happy, whatever. But I still keep that frame in the basement. It's not hanging up on my wall because I still hate it. But it's still in the basement because what I realized is that that day and going through those two experiences taught me some important lessons, about just being humble in the markets and not knowing what's going to happen the next day and, all that stuff. So we don't know what those positive or negative experiences are. So that's the first thing. Second thing is we continuously fall into traps of false positives and false negatives. This to me is probably the Achilles heel of most newbie traders. They do something very stupid, over allocate, wrong position, wrong strategy, and frankly get lucky. And they have a false positive. They got rewarded for doing something stupid. So now they do it again because why not do it again, right? You got rewarded for doing something stupid and you thought you nailed it. You had some, you know, optimism bias, you had some hindsight bias, like you knew that this was going to happen, right? There's some sort of mental accounting going on, like something did what you thought it was going to do and you just got really lucky. You
Mm.
do it again and then you realize that the market doesn't care that you got lucky that one time and now you start to fall apart. I think if you again go back to the process versus outcome, you focus on what the process is and what processes you need to start to implement. So position size, risk metrics, et cetera. all the market outcome stuff is frankly irrelevant. There's a really good study that Tom Bazzo did, he's an old market wizard. Not saying he's old, but he's just a market wizard from back in the day, right? Ran a
Right.
hedge fund, did pretty well, and he ran a study where he looked at different strategies in uptrending, downtrending markets, and the only thing that he changed was the position size of a long only strategy. So he ran the strategy long only, the same exact trades, but just slightly different tweaks to position size and risk metrics. And the outcome was wildly different, even if the stock tanked the entire time, right? And you
Right.
think to yourself, like, okay, it's not the stock, it's not the market, it's not the index, it's not what crude is doing, it's not what Trump or Biden or whoever is doing. It's what you're doing, like what your strategy, your position sizing, how you manage risk. That's way more important than all the other factors. So to come back around to the biases things, those biases that creep in, like loss aversion and confirmation bias, which we talked about, hindsight bias, like I knew it would happen, optimism, like it's just going to come back, right? Like I know it's going to come back because it always has before. Those are detrimental to you because they remove you from the system of trading. Does that help?
Absolutely. Absolutely. I, I, I believe in false positives. I mean, I say I believe, and I believe in the fact that there can be an extreme detriment to
Mhm.
everyone, and I know you touched on that. I wanted to ask one another on the lines of when you were first, I guess, starting out. What were your biggest hurdles or your biggest hurdle, and what do you currently have a fear, or did you have a major fear when you first began?
Yeah, I still think the fear is always losing money, right? I
Blowing
mean,
the
the fear is
account
just
or
yeah, the fear is just losing money in your account and, being wrong in what you're doing. I think when I first started out, the valuable lesson that I learned was I didn't have that skill. And what I mean by this is right now, because everything's manual trading and requires you to do manual trading versus automated and point and click, and you have to continuously interact with the markets emotionally every time. I believe there is a skill to trading. And I think that some guys have it for sure. No doubt. There's guys that have the skill. They're great chart readers, they're great technicians, they're great, they can control their emotions, they can position size, fast and in the moment. That is a skill. I didn't have that skill, don't have that skill. And so when I first started out, I thought I had that skill pretty quickly because I got some good wins early on and, traded some stocks back and forth using technicals. And I thought that I had that skill. And so for me, what I learned is that my skill set is not on the mechanics of, position sizing or the implementation of chart patterns and, technicals and reading markets and trends is more on the mathematical approach. Like I'm better at analyzing data and building a strategy around there and then just letting it go. But I still had a lot of issues with, okay, well, what happens if my strategy is not working? Like what happens if my strategy doesn't work for 5 years? When do you cut bait and say, you need to change things?
right,
And I think early on, as many traders do, they cut bait too early. They don't let the process work itself out for a long enough time period. And to be totally honest, and I think there's a lot of books like Muscular Portfolios is a good one that kind of backs us up with a lot of research that strategies really need 10 to 15 years to work themselves out. Like you could have a strategy that is an underperformer for the bulk majority of time, but still is a good strategy. It just goes through a random cyclical
a
downturn of
cycle.
performance. Yeah,
Wow.
cycle of performance. So I think that our level of patience as traders is probably way too narrow and thin. And our understanding of how long it really takes for some things to work out is probably not wide enough or broad enough.
Wow. Wow. I'm already receiving messages in the chat that everyone's loving it.
Sweet.
We just,
Great.
and I don't want to just keep you all morning.
No, I'm good. Let's keep going. I'm
I
great.
want to touch on this one. Uh, Interest in auto trading, and I have a good friend that I grew up with. We would talk about stocks and options, and he's always in automation. Or he said someone has to be able to build a bot. My son loves talking about building bots, and I know that you're going in that route on your website, and is that your next stage? What you guys are launching?
Yeah. Yeah. So if everyone, I mean, it's just beta.option alpha, but just to give you the brief
Yeah,
story, because we
please.
can touch on other things, but the thing that I've always seen has been the next iteration in this industry, and I just don't know why nobody did it yet, is the ability to execute automatically. Again, you talk to a lot of like if institutional players, hedge funds, uh, private equity shops, whatever, many of them have already built an automation system themselves. Some people code their own strategies right now. Some of the, market wizards who do a lot of mathematical based trading, they've even learned how to code their strategies themselves because what they know to be true and most people know to be true is that once you find a strategy, the execution and the management of it can be offloaded to technology. For whatever reason, in the retail space, we don't do that. Like we don't actually offload our decision making. And I think what it forces us to do is confront our strategy and our decision making at every turn, right? Like we go into the market and we close every trade. We open every trade and we have to deal with every emotion that comes with that. And we
Yes.
can't physically remove ourselves enough to say, hey, is this strategy good? Yeah, it's a good strategy. Like, so what? We're going to have wins and losses, right? Nope. We got to see the loss every time. We got to go in and we got to, make the trade every time and ask ourselves, oh, do I want to make this, trade? I've just lost 10 in a row, whatever. So we built an auto trading platform that allows people to do that with no code, which we're launching with, a couple brokerage partners and adding some more. I truly think it's going to be disruptive. I don't think it's not going to remove the need to do the things that we should be doing. And I just said this on a podcast I recorded that's going to be going out, but I said people aren't going to be happy because what I'm telling people, they're going to be spending more of their time doing the harder things that for many people they've just forgotten about or don't have time to do. So let me give you an example, right? Most of your time as an investor trader should not be on the execution of your strategy. But unfortunately, we're forced to do that right now. Most of your time should be on thinking about things like what strategy am I trading? Why am I trading these tickers? What position size am I using? How am I going to manage it? How can I improve this strategy? Can I do anything to reduce risk? Can I hedge? Can I whatever? These are harder questions. It's a lot easier just to open the doors every morning, open your trading application and just go, okay, what do I trade today? What looks cool?
Right.
Let's throw 200 things up. Let's check a chat room. Let's check a whatever, right? How can I just like a ravaged animal coming into the market, just like looking for scraps to eat of trades? That's not how your time should be spent. Your brain power is so much more efficient as a human making the decisions and then just offloading the execution. And I
I
feel like
love
what
it.
people are going to do is they're going to look at auto trading and be like, oh, got it. Auto trading. It just does everything for me. No, 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 no. Auto trading is an easy way to lose a bunch of money still using the same strategy, right? Like the same strategy that you don't want to, that you shouldn't be doing anyway. So if you auto execute a bad strategy, it's just an easier way to lose money too.
Right.
It should be a tool that helps you and frees up your time to do the hard thinking and analysis that we should be doing.
That's perfect. I mean, that's what my good friend and business partner, Maurice Jackson, and I, we always talk about. I mean, he preaches know your why. And I love that you're
That's a
saying
great
that
one.
we're not removing the groundwork, the behind the scenes, behind the curtain work, but just the execution. I- Let me
Yeah.
remove my emotional baggage from this watching holding on to this. I guess that was supposed to be a quick swing trade, and I'm going to turn it into a position trade because I didn't exit
Yeah. I
or
mean, like, how many times have we all had, myself included? We've had a million trades where you're like, that indicator fired, right? Like that cross happened, that thing happened, and I should have made a
right.
trade. And because one reason or another, you injected yourself into your strategy and made a judgment call, which was wrong, right? And it just was wrong. So those missed opportunities are what we have to try to avoid. And I think that all finance, all math, all trading is just a function of math. I mean, it really is at the end of the day. Like it's just a mathematical equation for expectancy and probabilities and risk and distribution. And if you understand that it's all frankly just math, I mean, take any investing, real estate, stocks, bonds, portfolios, whatever, REITs, options, it's all a function of math. Then the execution should mostly be easy. And for whatever reason in
That's
options and
true.
stocks, we force ourselves to re-execute it every time. And it's absolutely insane that we do that.
Wow. I know everyone is loving this. I want to ask a couple more questions. And if you wouldn't mind, if I could take a few questions from the chat as
Yeah,
well.
for sure. I'm here. I'm here with you guys.
Um,
This is awesome.
the So what is your relationship with Theta? I know you're a premium. You'd love to get as options traders, as a buyer of options, Theta. We have of course, if I buy enough time, I don't have to meet Theta. But the seller of options, you guys are excellent friend. Theta comes to Thanksgiving with you guys. So could you talk about the time decay?
Well, I think that time decay is just a function of the options. So if I would say that, like, what do I look for in an options trade, or what am I trying to target? It's actually not theta. So I think theta is just a function of an option contract. It's just the slow drip that continuously increases until you get to expiration. It's just what happens. Now, I think a lot of people, and maybe I'm right on this, and maybe I'm wrong. It's just my opinion, right? I think a lot of people look at it and they're like, "That's what we're capturing. We're capturing theta by selling options." I don't think so. I think that when you are trading an option strategy, what you mostly are capturing is the differential between different volatility periods, the implied versus the expected. That's all you're
Hmm.
trying to really capture, in my opinion. You're trying to capture volatility and price movement. Theta just happens to be the penalty for wasting time in the market, right? And that penalty increases as you ride out till expiration. So the penalty is bad for option buyers. The penalty is great for option sellers if nothing happens and time wastes away. Great. It's just a function of the market. It's not what I'm actually trying to go in and capture every day, if that makes sense. What
Yes.
I'm, you know what I'm saying? Like, I don't know. To me, maybe I used a good analogy. If I have let's say a piece of real estate that I'm like invested in, and it's a rental property. If I have to pay taxes on that and the taxes always go up, I'm not trying to arbitrage the taxes, like, do something. I'm trying to cover the
Hmm.
difference between rent and all my expenses.
Right.
And if the taxes continue to go up, so be it. It's just a function of buying real
Us
estate.
doing business in
Yep,
that market.
exactly. And I think that's exactly how it is for theta. So I have a different approach on it, but
Okay.
hopefully it helps.
No, I know everyone is connecting with that because yeah, I know that you're big with implied volatility and taking advantage. At least when I go to your website, that's one of the
Mhm.
things that I've noticed on there. I want to open it up to questions, but let's see. Are there two or three sectors right now or industries, Kirk, that you are looking at as we kind of traverse through this situation, this I guess the pandemic, but as we look for a recovery, are you looking for in a certain area? Because I think on an older podcast, I remember FXY was a ticker, Japanese yen or the UUP, different things. I
Yeah.
know. Could you kind of expound on that or kind of shed some light?
I think the one area that is interesting to me, and I only say it's interesting because it is interesting, and I guess you could say if you're going to go directional in a market or start to build more directional positions, you have to have some fundamentals behind it, or at least some trends behind it. And I think gold is interesting to me because gold's actually been moving over the last year and a half. You could definitely argue that the Fed is going to, I mean, they've said they're going to continue to print money and they're going to send inflation higher. They're going to devalue the dollar. Now, is all that stuff already priced into gold, right? Or do we have more coming? I don't know, but I think it's a macro trend which is really interesting, and there's a lot of support on a fundamental level as to why gold or some of these other ones like Bitcoin, et cetera. I hope they open up options for Bitcoin on a bigger
They
scale at
need
some
to.
point, but I know, right? But I hope that I think that these have a lot of macro, trending characteristics which make them attractive to start building more bullish positions in them than bearish, right? Does that mean that we go all bullish, that we don't go neutral? No, I think that that's interesting. So if there's an area that I'm interested in watching, it's definitely gold. And
Okay.
watching where it goes.
Wow. This is outstanding. I tell you what. Let's take a question. I have one from Rico. The question is, what is Kirk's market approach, and what are his thoughts on Elliott waves?
Mm, yeah. And I don't know Elliott Wave enough to be totally honest to say yes, it works or no, it doesn't work. I would say my approach to all technicals and all modes of analyzing positions is that you have to use multiple indicators over multiple time periods and see if they overlap. And even if they overlap, they're still not going to be probably better than 65% accuracy, even at that point. So we did a lot of testing just on regular technicals before, MACDs, stochastics, RSIs, Bollinger Bands, etc. Found most of the time they're about 61, 62%, the best ones for accuracy. So I would probably throw Elliott Wave into that general mix, with the only asterisk that I don't understand it well enough to say, yes, it definitely works or not. But I would say that if it works and if you use it and if it gives you some context as to building out strategies and trends, great, awesome. But should you use it in a vacuum? Probably not. Not
Okay.
with anything. Yeah. Does that
Okay.
help?
Yeah. Yeah. And more of a technical question coming up. Do you, as far as like an iron condors or scalping spreads, can you talk details of rolling iron condors, or let's say, how does rolling impact short time frames?
Yeah. That's a good question. I think rolling is an important topic. I think that ultimately, if you can roll a position and extend your trade duration, so basically give yourself another month, punt the football, right? So in football, to use a
Yeah.
sports analogy, often a team that wins doesn't go for it on fourth down, right? They punt and they give them, live to fight another day. I think that same analogy can be true in trading. If you have a trade that's going against you, it's an iron condor, it's an iron butterfly, and you want to punt the position out to the next month. I think if you do that without increasing the risk in the position, so which would be my key, and people know I'm pretty big on this, is like,
Risk. Yeah.
yeah, don't increase the width of the position. Don't increase the number of contracts to make it work, right? Like, don't make it fit. Like, it's just got to naturally happen. If you can move the position out to the next month, close it in front month, open it in the back month for credit, I think it's totally worth doing. And I think it's a smart decision because at the very least, if it loses next month, you gave yourself more time and you reduced the amount of money that you would lose compared to if you had closed it out in the front month. And I think that that is, I think that that's a valiant, like I think it's a valuable lesson that you can learn. But don't roll and pay to extend a trade, right?
Right. That's
That
okay.
help.
See, yeah, yeah, I know. I mean, we have a good handful of option sellers in here, and individuals who are interested. So I'm going to move on the next side of this. Can How long? What type of time frame are we looking at for you? Would you say for, I guess, proficiency, not just on the basic options, but understanding the exotics for you to where someone can be comfortable in the market and putting their capital at risk? And do you believe that they can do that on their own? If so, I mean, what are we talking about? The type of process building, type of work that goes
Mhm.
into that?
Yeah, this is a good question. Okay, so I think about it like this. I might be totally weird and geeking out on this, but I think about all investing as the accumulation of expected returns. So, what I mean by this is if you can all investing is just the most efficient transfer of risk for reward, right?
So can
So,
you say
who
that
can do
one more
that?
time? One more time. Efficient
All
return.
investing is just the most efficient and consistent transfer of risk for reward. That's all it is. So, I think that people do this process already because here's what everyone does. You know that the baseline scenario for all of us is money in the bank, right? We just put
Yes.
money in the bank. That has a certain risk and reward profile. The risk is zero, right? That, essentially the bank's going to default because they'll print money and give you your money. The reward on that is zero as well, or you could even say negative with, with inflation. So that's our baseline scenario. So now your question always should be, can I trade up to a different risk reward profile that in totality earns me more money than putting money in the bank? And
Hmm.
so now your first set of decisions are, okay, can I invest in the stock, whatever it is? Can I invest in
Right.
a CD, a certificate of deposit? That's the next step. Can I invest in a, index fund? Can I invest in what? So you're just consistently stepping up your trade-off between risk and reward, making sure that, or hopefully making sure that the expected outcome is positive. So I think that it's already been documented that you can put money into the market long term, index funds, whatever, and do pretty well. Now you start to add additional components and you ask yourself, okay, how can I do something better than just US indexes? Well, you could have a global portfolio of indexes. So not just US and all the home country buys that surrounds that, but now I can have, Spain and Germany and UK and whatever. Okay, that improves your performance generally. How can I improve this? Right. So you just keep asking at every step and stage, how can I improve this performance? And you don't move the funds until you feel like you can improve the performance, right?
Right.
Or you don't change strategies until you feel like you can improve performance. So to answer your question, can people get started in this? Yeah, and they usually get started the same way, which is they take money out of the savings account and put it into your brokerage account because they know that it's not doing them any, serving them any purpose in a savings account. Now they just have to, buy indexes and then start doing, things on top of that. Sell a covered call, use a trend strategy. I don't know. I think about it like stepping up your every time that you decide to choose a new strategy, it should be a step up in your trade-off between risk and reward, right? A better
Perfect.
improvement than where you're already at. And if you ask yourself that question all the time, is this a better improvement in my risk and reward, trade-off? I think you'd be better served doing that. Does that
Oh,
make
wow.
sense?
Absolute sense. Question from Nico. It says, going back to what you said about some people just having the it factor when it comes to trading, do you feel it's necessary to be good at math to make trading a full time job?
I think you have to understand some math, but I think the level of math that you have to understand is not calculus.
So we're not
You
doing the
know,
black shows every morning,
No, my
correct?
God, no. Oh, if I have
Uh,
to do another Black Scholes, yeah, no way.
Maurice
But
Jackson loves the black shows. He loves, so yeah, so I'll just
we
give a
could talk
shout
about
out.
Black Scholes all day. I got some interesting thoughts on Black Scholes. But I think when you talk about like what I was talking about with the it factor is if you think about what it is required of you for trading right now, not only do you have to have the time to do it. So that's a big one. You get over
Okay.
that hurdle, you have to remember what to do, when to do it, and you have to be emotionally stable enough to do it
There it
on
is.
time,
Yeah. Oh,
right?
man.
So I try to tell people 90% of trading right now is you. It's all on you. I mean, the strategy in the market is a very small percentage of it because ultimately you are the biggest factors of your success. If we can give people a tool, which is my ultimate goal, is to give people a tool that does the heavy lifting of, and when I say offloading the execution, that's what I'm talking about. Like offloading all of that stuff, which is not stuff you need to worry about. I feel like you can improve your performance because you can worry about the stuff that make a difference instead of having to, scrape that under the table or not worry about it enough. So I think that you should be good at some math and you should understand probabilities and distributions, expected returns. I think that that's the level of understanding you probably have to be at if you do want to make a pretty good go at this.
From a full time perspective as
Yep.
well. Well, okay. I'm going to get close to wrapping it up for you. One quick, another technical question from the standpoint of at what time frame do you tend to roll your positions? Is there a
Mm,
specific time frame?
yeah. So there's a lot of research so far out there that you should close positions around 20 days, 15 days to go until expiration. So far, the research we've done suggests that you should probably give it more time, right? I
Okay.
think you should give it all the way up until the week of expiration. And we all know this to be true that there's some pretty big moves the week of expiration. And that also happens to be just, again, a function of the market. Time decay is the fastest that week, right? So
Right.
positions that would have been outside of the range, for profit come in really quickly that last week. So I'm more of a fan of rolling the last week. I want to give the position as much time as possible to work. And if it doesn't work out by the week of expiration and things aren't going the way I thought it was going to work out, then I'll roll it. And I'm okay doing it at that point. But if you roll too early, what you're doing is you're slowing down the theta decay, right? And the differential and volatility. You're just basically slowing that down and punting it out to the next month. But the position's going to move slower in the next month. You know what I mean? And I think that
Right.
that is not thought of sometimes. People love rolling the contract out because they're like breathing room. They're like, oh, good. Okay. Get the position out to the next month. I don't have to worry about it until 40 days from now. But now
Right.
the movement in the position slows to a much,
Mm.
slower pace. So now, right after the roll, you get the exact move you wanted in the stock, but the
more.
position still didn't make money. Yeah.
Okay. Okay. Well, trader psychology, how big is that for you, especially with the fact of patience that comes into being when you're selling premium and what type of when did you buy into trader psychology?
What do you mean in the
Ju-
trader psychology, like in the
Just
thought process of it?
Mark
Yeah.
Douglas and just the fact of just
Yeah.
our I know we talk about biases and things of that nature, but it seems that is one of the key factors of removing ourselves from the
Yeah.
situation.
Yeah, I bought into it because I got wrong, because I realized I was wrong. No, and
Right.
I think everyone just has to they've got to live through it to know, right? Like you don't know the stove is hot until you touch the stove, right? Like your
Right.
mom's like, that stove's hot. And you're like, I don't know, I'm gonna touch it. Okay, got it. The stove's hot.
Right.
So for me, heading out of the 2008 crash, I
Mm,
thought heading out of the 2008 crash, 2009, that I was like, oh, market's on a tear. It's way too high. Like, and I just started getting really aggressive, perma bear style, trying to trade the markets lower. And of course, the market just continued doing what it did, not
right.
including what I wanted it to do. And but I doubled down on positions. I got a bunch of confirmation bias. Like I started reading news stories that said, yes, the market is going to go through a crash, right? This is just a double top. And I was like, oh yeah, of course it's a double top. How could I be so dumb as to not notice it's a double top,
Right.
And then the market blows through that level and never looks back from there. That's where I learned. I was like, you know what? I As much confirmation bias, as hindsight bias, as much as I thought I knew about, I just don't. And so now that to me was a very valuable time, because now what I learned in that process is I frankly don't know anything about where the markets are going to go. And, if I have an assumption, it still could be, totally shit at the end of the day.
Yeah.
And I just need to trade what's on my screen, or, trade what the math is telling me to do. So
Wow. Could you tell us, recommend two trading books or two books that maybe kind of helped shape you or inspired you or would fit into what we're discussing today?
yeah. So I think, oh man, I'll tell you right now, the one favorite book that I have right now is called The Misbehaviors of Markets. And it's by it's by Brandon, what's his name? Gosh,
Let's see. Let me find that.
Mandelbrot. And then the other guy in there is Richard Hudson, who is his co-author. If you trade options, or just if you trade in the market, to me, required reading. It is not an easy
Misbehaviors
read.
of markets.
Yep, it's not an easy read by any stretch. It's not
Okay.
an incredibly difficult read, but it's not a cakewalk. But if you look through that, even if you look through that book at some of the charts, you realize how broken models are for associating risk and return and volatility, et cetera. It gives you a different level of understanding. So let me give you just one like little quote in the
Okay.
book, right? On And just to preface this, right? Everyone like familiar with the normal distribution and the Black-Scholes model and all this stuff, right? Like the Brownian motion, that things just have this very uniform, warm, distribution of returns, right? Most of the time things are neutral, and then there's these tail events that happen, black swans. According to the market, according to the distributions like Black-Scholes, the collapse that happened in, let's say, 1998, 2002, 987, in 2008, in 2020, all of those events technically never should have happened in our entire lifetime. Like some of the odds of those events happening where the market fell 7% in a day, or 4.5%, or 6.5% over the course of 2 days, were 1 in 1 billion, 1 in 3 trillion, 1 in 7.8, 1 in 4 trillion types of events.
Wow.
Basically, that in a normal distribution, if the markets were truly normal distributed, those events should have never happened even before the dinosaurs. But yet we have them all the time, right? We have these massive days, these massive moves all the time. So what I love about that book, and I interviewed the co-author because the main author died a couple years back, but the co-author and our interviews, he said, look, he's like, there's no perfect formula for the market still. There's no formula that says this is how everything works. And that's why it continues to be this beautiful dance of risk and return, because what you
Mm,
need to do is you need to manage that risk and return on an ongoing basis, right? Because there's no perfect outcome. And that book really shows you just how crazy markets can be and how bad the current system is for things like efficient market hypothesis and efficient market theory and stuff. It's fascinating.
Wow. Well, I tell you this. Is there anything you'd like to say to I guess our crowd, our group today, and just I want to go ahead and give you time to mention what you're doing, any new events coming up, because I really appreciate you coming in today, and I know we had a perfect window for during lunchtime.
Yeah, it was good. It was good. No, I mean, look, if anybody has questions, you can always email our team at Option Alpha. We'll help point you in the right direction. We've
I
got
put the
basically,
website, the beta website, but
yeah,
it is
yep,
optionalpha.com for your primary
yep.
website,
And then
correct?
everything on the new auto trading is on the beta site. So beta.optionalpha. But look, I mean, I've been doing this over 10 years, just trying to help as many people as possible. So if you guys have questions, you need help, you want to be pointed in the right direction, got a lot of free courses. We have a team of 5 people who just sit and email all day and just answer emails, whether you're free or not. Like you're a free member, which most people are, they just answer emails. So if you need help or have questions or want to be pointed in the right direction, just shoot us an email. We'll help out.
Wow. Well, Kirk, man, I really appreciate you coming through, and it's amazing that Brandon Geyer, we had some Rays connections right here.
Yeah. Yeah.
We took a tough loss last night, but anyway, we'll get back into that market. But uh, if please reach out, and I'd love to stay in touch with you.
Yeah, man. That'd be awesome.
But
I think this was fun. I'd do it anytime. This is great.
well, thank you, and everyone in Sydney. Sydney reached out, and it was I guess the connector.
Mhm.
So this has been great. Everyone, thank you guys for coming in. If you
Yeah.
want to
Thank you
just
guys.
shoot a thank you to Kirk, and email me if you have any other questions, and I'll try to pass it along as well too. So everyone, thank you all for coming out today, and Kirk, have a wonderful week and remainder of 2020, so we can profitable one.
Yeah, absolutely, man. Well, thank you. I appreciate it. And yeah, thank you so much for having me. This was fun. Do it
Oh,
anytime.
I appreciate it, guys. All right, I'm gonna
All right,
stop the
take care.
recording.